Hi everyone, this is Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending 4/21 of 2019. The date it happened was on the 18th. That was on a Thursday, I believe. That was the last day of this trading week because Friday we were closed. Stock was Apha, A-P-H-A. The strategy was based on a continuation gap. It means a gap that did not change the direction of the stock. One of my favorite things actually. Entry, a 1-minute secondary sign of weakness. The management simple, reward to risk, about 1.4 to 1. As usual, before I discuss this play, let me remind you it's coming up this week, free at DTS. Couple of things this week, couple of big events. Monday is the bi-weekly scanning session. If you are a member, you will receive your invite on Monday. Look for it. If you're not a member, make sure you get over to the website and just become a free member at DTS. And Wednesday, I'm doing a special event called the Best of the Concepts. This is going to be the best type of presentation from the last 18 months of presentations. However, I am a guest at Trade Out Loud, so you do need to register for this event. If you can't click here, you can go to the website or you'll be receiving an email. Everyone, if you're hearing this, will receive an email if you're on the mailing list to be registered. But you do have to register even if you are a DTS member because it's not being hosted by DTS. You need a special invite. This is the daily chart of APHA on the day that this happened. And that's what it looked like the day going into the gap. The stock gapped up into this red bar. A lot of people mistakenly think this is a bullish gap. There's a fine line here between when this becomes bullish and when it becomes bearish. However, this one is clearly bearish to me. I'll show you some reasons why. And this actually is one of my favorite strategies, although I don't find the exact setup very often. And it's one of the reasons I do keep a couple, 3 strategies in mind. It is one of my favorites when it happens properly. So there's the daily chart what it looked like after the day of the trade. This is the 15-minute chart going into the day. And of course, this came to my attention only because I saw the gap up that day. Actually, it was on the gap carry list as well because they gapped down the other day. And it was gapping up. And this is really the critical area that you have to stay below on this gap up. And on a bearish pattern, when you gap up into it, typically it continues to sell off. Sometimes it tries to go higher. That's the best way because you get the best entry. You can see this one based on the 15-minute chart right in here. It just fell fairly quickly. My concern here was not getting into the trade. Here's the 1-minute chart. That's where the area it gapped up to. There's a 1-minute chart. It gapped right there. And it started to fall pretty quickly, so I almost missed this. Luckily, I got that green bar in there, which gives me an entry. It was entry under that green bar, 794, stop 806. Grabbed a first target. You just kind of have to on this play when it fills the gap, even though I'm pretty confident it's going lower. You don't know if that gap fill is going to be all there is, so I took a half on the gap fill. And a second half down there right at 10 o'clock reversal time at a pretty dramatic drop. It did end up going lower, had some more money I left on the table, but this whole thing lasted about 30, 32 minutes, so made it a nice little trade. All this done in the DTS trading room where you can join us, play along. You can take a trial if you want to see what it's like. There's also a lot of great information about it. If you go to the website on the services page, you can click and get a nice 1-page type summary of everything that goes on in the DTS trading room. Until next time, this is Paul for DTS. Good trading, everybody.